Hello, today is Friday. It is about 1:06 in the afternoon. Some interesting price action going on. Don't foresee a ton of movement either way. It might slow down into the close, meaning some people might take some gains in certain areas toward the close. Not an environment that I am very interested in doing short-term trading, nor really put a long-term position in as well. So this is kind of a hold period for us, and potentially even minimize positions by the end of the day, reduce positions by the end of the day based on what we have in the market. And we are heavily technology based, which has been good for the rally. Wish I would have had a little bit more on. Currently, the market, and we'll go over all this. We did not time this perfectly whatsoever. We reduced position heavily at the 2600 level. We still kept some on in case it did go higher. It was the right area to be. Wish we would have kept more on. It's hard in hindsight knowing had I kept all that on till now where we would be right now. I don't think we would have a client that would actually even be negative. We actually do have some clients that are still positive before any of this happened. So we're doing okay. A little disappointing, truthfully, that I didn't keep on a little bit longer. But I do foresee us getting a little better pricing in the short term. So hang in there. It's frustrating. It's frustrating for me as well. I have a hard time with that sometimes, but got to move on. Keep watching price action. Here's something that I wanted to show you. Again, it's 1:08 in the afternoon. Definitely not the end of the trading day, but I'm very cautious here. Different sectors and how they're doing. Leaders will be leaders. Technology right here. This is over a 200-day period. Clearly the winner. Biotech has done well as well. Obviously trying to resolve some of these coronavirus issues. Many of those companies have done well. Consumer staples, a conservative area. People fleeing to those areas, not a surprise. Consumer communication services has also done well. The areas that have really struggled, and not really a surprise, regional banking, that is brutal. Airlines, that is brutal. Energy. Crude is struggling even at the 18. Crude oil is struggling even in the $18 range, which is nuts. I mean, you're talking to the 1990 level there. Got to be really careful. So there's some winners or some losers. Truthfully, I do believe some of these areas are a little extended short term, and I think we might see some people take some gains. But the market actually could do well if we get a little bit of a rebound in these areas short term. And that could happen. Maybe these areas that have been leading take a breather, move sideways or a little bit lower. Maybe these areas go a little bit higher, and that keeps the market afloat. Again, we're going to go through some of the tough questions here that nobody really wants to answer, but we're going to try to be direct with you and go from there. So wanted to give you that perspective to show you not everything is doing well. You have to be relatively selective here. And I do think lower pricing will come, unfortunately. It's not being pessimistic. It's just you got to understand we've seen over a 30% rally off the lows. That's a huge move. And some areas are definitely overbought, in my opinion. It doesn't mean they won't stay overbought. But a little consolidation here would probably be reasonable, just being realistic. But again, we're going to take this day by day. That could completely change Monday. I might add to these areas that are low. I really have no interest in them now. But if I'm seeing some strength there with some accumulation from institutions, I might add some there. Not because I personally think they're great areas, but because money is being put there. So you got to take your emotions out sometimes. Actually, you should take your emotions out all the time and watch price action. So that's something where we got to continue to stress and just be realistic about this. Again, in hindsight, I wish we would have had a little bit more allocated in, even right now. But right now, I have no interest in adding at these levels. So the tough questions, is the bottom in? So when people ask that, you have to understand, is the bottom in does not necessarily mean the current price that it's at, but have we hit a low? And based on historical evidence, which again could be worth a grain of salt, but usually when you see, let me go back here. Usually when you see the market hit the 50-day retracement. So again, this is from the high to the low. You take those levels, 50% regained back, and it actually goes there. Historically, if we get to that point, it usually means you don't retest the lows. Now, it would not surprise me, and I want to be realistic about this. So I'm basically saying historically, which again could be worth a grain of salt, it usually does not retest the lows. I hope it doesn't. It may, though. We got to take that day by day. But could we see 2,500? Could we see 2,650? I think very possibly yes. We're kind of in this phase where the market is seeing some optimism, which is great. Again, happy to be part of the rally. Wish it would have had more, but you're getting the optimism from Gilead saying they have a pill that will speed up the essentially the symptoms and get people healthier faster. That's good news. President Trump initiated some plans to get back over the next few weeks, months. It'll really ultimately be up to the governors of each state, but we'll see what happens here. So it's you have a lot of large institutions being neutral here because many, truthfully, have missed a huge amount of this rally. I mean, fundamentals, truthfully, beyond with a few exceptions of sectors, are not good. But technicals have been very good. Again, you get a huge sell-off. The fear in the news makes it go extreme. Now we're getting some optimism, probably a little extreme to the upside. Just being honest, doesn't mean we won't hold these levels. So yesterday, after the bell, we got news of Gilead producing this pill that's doing pretty well. And the market rallied all the way to over 2880 in futures. That's important. That's not going to show on here. But on futures, we went all the way to 2880, which is nuts. Huge move up. We're struggling to hold those gains, but we're doing okay. It hasn't been horrible price action, but not great either. Let's see where we're at now. So we're at the 2849, and it basically is staying right there for right now. So it's not horrible price action. Would not surprise me. So when I say I don't expect the low to be, it might be retested, but historically it usually does not once we hit the retracement level of 50. So again, who knows? But these levels I do expect to potentially be tested, especially the 2650. Again, you got to keep this in perspective. A lot of big asset managers do not have a lot allocated right now. So if they decide on any one of these dips on any of these areas to start adding, it's going to make the market go up in that direction. So because not many are really fully invested, that could be a reason why we might not go to the lows, because on the way down, I think you're going to see a lot more pressure from these institutions being like, I got to get in. And so that's kind of my thought process, why I don't expect all the way down, but you might see some downward movement. So let's go over to the next one, RSI. So this is intraday energy. I'm going to update this so it's actually more accurate with the current time. So what you're seeing here is what I was basically saying yesterday in my social media posts. If we can see some of the laggards play catch up here, this could keep the market afloat. The overbought areas, basically right here in a line, the worst performing of the day, they're still doing okay, but they're lagging today significantly. You're seeing energy rebound, even though crude is not really doing anything whatsoever. It's just people buying the crap at the bottom that is they believe to be too low. So again, these are some areas that if we get some rebound here, could push us a little bit higher. And I want to be real about that. But let's go to the, this is interesting. Let's go to the 1 month. And you'll see energy. This is nuts. Energy, because it was so low, has rebounded a decent amount. Consumer discretionary, healthcare, technology, the leaders you would normally see during these environments. So, and then if we go to the week, that's going to give you more insight of really what's been doing well. And that's basically these leaders right here. So just giving you the real perspective there. Will the market continue its short-term upward trajectory? Basically, if it does go higher, I think it's going to have to come likely more broad-based, meaning probably from the areas that have been struggling but are doing well today. So if it does, again, I think a lot of these areas are a little bit overbought. Doesn't mean it can't stay there, but probably is going to need to come from there. So probably need to see some consolidation, but I think the move will need to test some lower levels before we go a little bit higher. So what are you seeing from a technical standpoint? Price action realistically has not been bad at all. And it's important to remember that is that there's a lot of haters out there where the price action is telling, excuse me, a different story. From a fundamental standpoint, things are not great. That is a concern. But again, the market is forward pricing 6 to 8 months. So a lot of people are saying, hey, we might get out of this. It's not going to be pretty, but 6 to 8 months from now, we might be a little more back to normal. Our company's going to struggle, yes. And I think the ones that are lagging are down for a reason. Financials are going to struggle. Airlines are going to struggle. They're going to struggle getting back to normalcy. They're going to struggle, especially cruise lines, getting back to normal. Headlines continue to preach the Great Recession as a comparable. There actually are some comparables in the numbers, meaning unemployment, credit spreads, and all that. So the comparison is justifiable, but I do not expect this to be an 80% decline whatsoever. I hope that I'm correct on that one. I don't foresee that happening, but they're comparing some interesting things, but I do not think that this is a Great Recession. But it really puts in perspective like how serious this virus is, and hopefully pandemics in the future will be more better handled in the future. So what do you see for you? What do you want to see for us to basically put more money to work? I want to see more broad-based. We're getting it from a few areas, which the market can do okay there, but we're going to need to see some of the laggers play and participate as well. I want to see the technicals and fundamentals be a little more in line. We're seeing some companies do okay. And again, this is going to be an environment where select companies are going to do better than others. And that's really important to understand. I would like to see the laggards, like I said, show a little more strength, the banks especially. I would prefer to see more testing a little bit lower and then rebound, which we have actually seen. So it's hard to be too bearish at this point because we're actually holding key levels that could obviously change in a heartbeat, and we would react quickly. But we do have a lot in cash, and I'm okay with that at this point. I'm always going to be a little more conservative, get out a little bit ahead of what I think could go a little bit further. That has worked out for me in the past. It might make me look like an idiot for 2 weeks, kind of like this last 2 weeks kind of has. But I think we will be well suited for the future pricing. So would I prefer a balanced approach to getting people back to work? That's basically what I would want to see. Getting certain people back to work over time. Again, I am a realist to say the economy is contingent upon the consumer, and certain areas are not going to do well for a long time. We have to be real about that. I am optimistic that long-term the market will do well. That's the underlining summary of all of this. But short-term, I am a little concerned that if large cap tech rolls over, I have a hard time believing that some of these other areas that we have no idea, or there's a lot of uncertainty about, is going to hold up the market. I hope I'm wrong, though. So let's go back to the chart, see if there's anything else real quick. These are showing the sectors and the percentage of stocks within that sector above the 50-day moving average. Again, sector-driven stocks, number of stocks, percentage of stocks above the 50-day moving average. Interesting to see where the strength is coming from. Consumer staples, healthcare, technology stocks, utilities, and the struggling ones, real estate, industrial, consumer discretionary, energy, materials. Kind of interesting. So it's interesting to put that in perspective. There's a reason why we tend to look at these things, because that's where money is being put. Let's take a look at the VIX. The VIX is showing better and improvement. The VIX is below 40, which is ideal. We wanted to see that. Let's see if one thing that does concern me is usually when you get the VIX, the RSI level in this range in the near like 40-ish, you do see a pounce. So I do not think the volatility is over. And I'm allocated that way as a result. Let's see if there's any more that I wanted to show. There's a ton that I could show you, but I'm not sure it really makes sense. Small caps. We want to see this get above 125. We were so close. This was actually tipped off last week to say we are so close, right at key levels. This was going into Good Friday saying, hey, it closed right at a key level, struggled. It's trying to bounce back. It's doing better than the rest of the indexes, which I think we need to see value play a little catch up if the entire market is going to do well. So one more. Let's see what else we got. Gold. This will be interesting short term. Currently, is it holding the 50-day? Yes, it is, which is good. Right now, it's at 158. The 50-day is, or excuse me, I should be showing the 10-day, sorry, which is the purple line. It's right at it. 158.50. This might need a little bit of a cool off, but more midterm base, this could be an interesting area. This in TLT, which is right here, which is long-term treasuries, 20-year. Again, if I'm drawing a line here, it's struggling to break through basically the 170 area. It very well could happen short term, would not surprise me. So we'll be watching that closely. RSI still above 70. So in short, the summary is this. I backed off risk significantly 2 weeks ago. I still have what I want allocated at this time, which is about 15% into the areas that I think will do well. So I wish I would have had more. I had at one point 90% in that area, and on the way up have been taking some off. So got out a little bit early, a little frustrated with that, but it's a very difficult environment, and we have to be just thankful that we're getting gains along the way. So hang in there. We'll get through this. Let me know if you have questions or concerns. Again, the last few weeks, we were taking a more conservative approach, which we did not keep up with the S&P 500 the last couple weeks. But because we had 50% in cash at the peak, we are still actually outpacing the S&P 500. So hang in there. It's been a frustrating couple weeks, but we're still making money, which is the most important part. So let me know if you have questions. I'm here for you. Have a great weekend. I'm going to get some rest, much needed. It'll be interesting to see what the close has, and I'll be watching closely. So thanks again. Have a great day.